Good evening and happy Wednesday, traders. This is Carlos, CEO of G.A.R Capital. Thank you for joining me this Wednesday evening, 7:53 p.m. Eastern Standard Time. And this goes out to our clients and followers across the internet. So, with that being said, let's go ahead and get started. And boy, did we have a day today. We had President-elect Donald Trump speaking today. We also had oil inventories earlier today. And to get that information on the oil inventories, we always check Twitter, we always check Bloomberg, and our Forex Factory calendar. We had more of a buildup than forecasted, about three and a half times more, 4 times more than the expected buildup, and oil did pay for that. Actually, pretty funny. Dennis Gartman, one of the analysts over there at, a contributor for CNBC, traders would know that usually go the opposite way of what he says. Oil was trading around the 50 handle earlier today. Didn't want to break it, but it was staying near the lows of the 50 handle. Right now, this is a 4-hour chart, and then we had a huge swing to the upside from the low about 50.72 to about 52.20. We closed. Where it was high as 52.60, near the 53 handle we were getting up to. Looks like that traders are rejecting that 50. We had a couple of Saudi headlines talking about cutbacks, but the inventories were there. The most important thing is demand and inventories. But right now, the oil market is all based on headlines for the most part and strong dollar. Stronger dollar does make the WTI crude oil weaker because it is priced in dollars, as we all know. But we did have about a 2% jump today in U.S. oil markets. We did, again, remember our call. We were expecting 54. We had a nice sharp drop off all the way down to 50, past the 51 handle. Now we're about 52.20. Sharp moves back and forth. But as we look at the daily chart, pretty choppy, but still a bullish point of view the whole way around. Any of you could see through this channel right here. We are expecting still bullish 54.5, 55 is our call. We were expecting it last week, didn't get it, and but we were short dollar CAD as a proxy trade against it. So, but CAD has been holding steady even with WTI falling near the 50 handle. So what does that tell you? Again, we were expecting either a breakout in oil or we were expecting more Canadian dollar rise higher against the dollar, which would be the inverse of this trade. We got as low as around 31.20. We did close out our trade to around 31.40, which is around about this level. We closed around 31.40, which was our profitable trade of the day. We made about 240 pips on 2 positions. Took a little bit of patience. I am looking to re-enter this trade as a hedge to our dollar longs, as we did before. But for the most part, I think we are steady now at 31.67. If we do get a nice little pop up in dollar, I would expect it to go around 32.50, about another 100 pip pop, and then we can go definitely re-enter to the short side. This is a 4-hour chart, so if we can get an entry right around here, we'd be pretty set. So that's the expectation of the next go around. So if we get around 32.38, which is about 50, 60, 70 pips, nearing 70 pips above the current levels, if we get a nice little jump up on the dollar, which would rise against all our other trades at the moment, that'll be another short on our ends as we expect oil to strengthen to the 54 handle. As we're trading at 52.22. So again, guys, let me go ahead and adjust this. Looking to re-enter on USD jump 133. 37 to 40, 30, 50 would be the re-enter on the shorts. All right, so let's speak about the elephant in the room here. Donald Trump's speech. If you were following equities this morning, after the press conference that he had, biotech stocks did take a big drop. biotech. The biotech ETFs were definitely taking a hit as he was calling out drug companies and their pricing policies. With that being said, as well, stocks took a hit with those big drops in biotech across the board. Biotech usually Russell 2000 small cap mid-level stocks. So again, what took with it? Yen, of course. Anything with yen in regards to safe trades, any kind of volatile movement. VIX, VIX. If the VIX increases, you should be able to see the JPY strengthen across. So with that being said, we're going to go ahead and take a look here. We did hit the bottom around 114.24 when it started rallying against us. We had a high today, earlier today, of about 116.59, about 140 pips from the current levels. We were about 200 pips swing just from the president-elect speaking. So guys, I want you to really take a look at this. The simple fact that we are living in a world now, the reality is that when the president-elect, January 20th, Donald Trump speaks, it's going to be like a Federal Reserve meeting. We don't know what to expect. We don't know confirmations of his cabinet members or his Wall Street policy. We were expecting maybe more of a laissez-faire, meaning let it go, trade, hands-off trade approach to capitalism, to the capitalist view of Wall Street, of less regulations, more of the market, free market. But even with this drug policy and the fact of drug pricing curves, sounds more like around Bernie Sanders talk, that's creating the market a little uncertainty. So the one thing we can for sure say regarding Donald Trump speaking is there is no certainty involved. We just have to be, as traders, to be even more careful, be more mindful, and keep an eye on just the macroeconomics in general. Technicals are not going to be enough in regards to our trading. We have to look at the macroeconomic side of the world in economics. We have to see how things affect other things. China talk, trade talk, Mexican peso, oil markets, commodities, including gold, bonds. We have to look at the big picture if we're going to go ahead and profit otherwise. Guys, remember, when it comes to trading, it's long term. If this is a quick scheme for you, you're in the wrong business. I recommend a casino. This is a long-term deal. We're traders, and it's what we do. We look at long-term. This is not easy. There's going to be swings, especially in Forex, due to liquidity. So what we do is that we make sure we have wide stop losses for moves so we don't get in and out of trades. Volatility is at ease with regard to these wide stops. And we make sure that we set our proper position sizes. Remember, guys, 1 to 2%, 3% is the position size of your portfolio you want to use for every trade. Make sure to have wide stop losses the way we have them. I usually recommend 150 to 200 pips just to the volatility of right now. We're in an unprecedented time, new president. We don't know what to expect. So with that being said, the yen has been strengthening due to this uncertainty. Just a risk-off move like we've always been talking about. When risk-off moves happen, this is what's going to happen with us. 115.14 is the current rate. Right now, we got in at around 114.47. We got in at the low. We have a couple of positions open on the end. We're expecting it to bounce up. Again, these kind of big swings, basically overreactions, these don't tend to last. As you can see, these kind of candles where we get jumps and they get back up, just like anything else, guys. Patience is what's key. Let the guys get knocked out. Let the market churn. Let the market understand the news. I do believe this week we will end the dollar on a strong note. We had a nice bounce back from the lows of 114.40, 70 pip bounce back. We almost got a 100 pip bounce back. A little bit of sell-off. We want to see what Asia brings to us. But again, guys, long term, we know what our plan is. On the daily chart, let me go there, the weekly chart so you can see better off. Again, guys, we know what we're looking for. 120 is that target. We want to get near 120 and then short. Again, this is the pattern we're looking for. The ABCD pattern. Again, we do believe we may have a little more of a dollar sell-off, but for the short term, I do believe dollar is going to strengthen. I do see it's a little bit oversold. Is a Trump rally probably over? Probably. More than likely, but again, I want to see what equities do when Dow hits 20,000. That's the barometer. When Dow Jones hits 20,000, I want to see where the dollar reacts to that. I want to see what bonds react. Now, you're probably asking yourself, what do bonds matter to me, Carlos? What difference does it make? I'm glad you asked. So let's go to a bond. Let's go to the bond yields here. But I always say, well, Carlos, why are we speaking about bonds? Bonds are very important. These are the levels for the bond. This is a 4-hour chart on bond yields. Bonds are inverse to yield to prices. Bond yields are inverse to prices. So when prices go up, yields go down. What does that mean? If the demand for a bond, meaning a safe haven investment, government debt, is higher, meaning more demand for a safe haven, the yield's going to go down. They don't have the government bond doesn't need to compete for a return. It doesn't need to compete. Doesn't need to put itself out there to attract more money. They can lower the interest rate to still get demand on the bond. So right now we're at 235. Look how high we were, 262, around 12:15. What happened around this period of time in December? The Trump transition, the acceptance of Trump being the nominee. We had the Trump rally. So let's look at bonds ever since election day. What do you see here? Right here, you see a sharp rise from 1.71% yield all the way to 55. Now, you're probably saying to yourself, well, Carlos, the Trump rally has faded. The euphoria has ended. We're going to go back to where we were. I don't believe that, and I'll tell you why. Here's the comparison to the S&P 500. Basically, SPOOs. So let's go ahead and put SPX, the S&P 500. I just joined the S&P 500. Okay, so we're looking at SPOOs in a 4-hour chart in comparison to the 10-year bond. As interest rates fallen, the S&P 500 has risen. This inverse effect is not usual. It is usual. The better the stock market goes, meaning more risk appetite, interest rates should fall. This is the yield. If you see the yield in comparison, right? 2017 already the month, so we're going to go ahead and move to the month. The month of January. Right now, S&P has been pretty flat, 0.39%, but the government coupon, the yield, has dropped 7.2. We're already getting that kind of spread, meaning that we're getting a less appetite for risk. But on the longer term note, here, you can see that bonds have definitely outperformed on a daily. We're not getting the full view here. Okay. S&P, about, if I'm going to move it up here, starting in 2017 again, let's go bring it up, around 1% gross return on the S&P. Bond prices have risen, but the yields have fallen. So we're actually getting a little bit of a mixed bag here. Safe haven mixed with stock growth. What does that tell me? A lot of cash out there. A lot of cash. There still needs to be more put into work in the market, but I do believe that stocks are going to rise. So let's go ahead and take a look at the S&P 500. Let's compare the S&P, let's take away this, and we're at a 4-hour chart. Let's take a look at the hour. Pretty choppy right now, 227. Excuse me, this is SPY, I want to do SPX. Pretty choppy, 222.74. Let's look at a daily and see if we see any patterns or resistance levels here. Bear with me a second, guys. Now again, the S&P 500 is a barometer with the bond yields and the bond prices to see where the market sentiment is. Now, see, this is not loading, so we're just going to bring up here as dollar franc. And we're going to compare this to the 10-year bond note that we were speaking of. I want to show you that how safe haven works with government bonds and how it compares. Let's go ahead and bring up an hour chart. As you can see, as bond prices have fallen, kind of dropped here as well, dollar franc. So the franc moves in correlation with bond yields. Well, inverse correlation. The stronger the yield, more of a stronger demand for non-safe assets. Lower the yield, you see here, you see a little bit of a move down. Same thing for this franc, it gets stronger. So we do see moves here in line, and then just a little bit of a drop. But the dollar has been pretty strong against the franc in comparison to the 10-year note. 10-year bond, excuse me. But we have exactly what we're looking for. We know our levels and expecting the dollar to bounce back against the current market. So let's take a look at the dollar. What is the comparison here? 101.68, big mark on the daily. You're gonna see how the hourly, how that moved up. All Trump here. We had a nice round up around to 102.76 until the actual Trump the Trump press conference, and then we had a sharp drop around to 101.50, about a 1% drop off, and then pretty much tapered off at 101.70 with a little bit of a bounce. So looking at the dollar currency index on a 4-hour chart, longer term, we still expect a bullish rise here. Still expecting to bounce off these levels, as you can see, 101.75. Looks like it should be hitting around the support levels around 101.50. Excuse me, 101.60 levels. Looking at daily. Again, still bullish. Even through October. Dollar has definitely strengthened across the board. So again, with that being said, we are still expecting a bounce back past 103.50 to 104 according to this trend. So what we have is the euro dollar. Euro dollar, we're going to go ahead and show. Euro has definitely been taking a beating, even with the dollar taking a little bit of a hit. 105.81, still in the green on a couple of positions here on the day on the euro dollar, and we're expecting it still to go down as well. So we do have a little bit of exposure on the US dollar. We closed out our hedge with dollar Canadian dollar, but again, that's based on oil. If I see oil breaking the 54 mark, I want to go ahead and re-enter that trade or see where we're at on the dollar Canadian dollar. But with that being said, on the rest of the week, it's just been a tip-topsy week. We have unemployment claims tomorrow. We have Federal Reserve Chair Yellen speaking tomorrow at 7 p.m. Should give us a little bit of clarity on maybe more Fed rate hikes. It's just a town hall meeting. We're going to have questions. The expectation is 2 rate hikes for the year as consensus. Should be pretty bullish if we get more than that. We'll see from there. And we have retail sales on Friday. So Friday is a pretty big day in regards to data. Right now, the yen is trading at 115.04. We haven't broken the 115 barrier yet. Remember, 114.25 was the low. We have our strategy. We know where we're going. Make sure bias is always key. We have a bias of where we're trying to go. That's the most important thing. We're not trying to get small moves because we're going to get killed every time. The markets are moving so quickly, it's hard to catch every single move. Right here, 115.02, just want to recap. Euro dollar about 105.84, yet to break the 106 since we dropped down the 106. 101.38 on the dollar Swiss franc, and oil till tomorrow. So that being said, guys, that's what we have for the week. Again, guys, longer term moves, what we're looking for. We want to make sure that what we have going on is in line of our longer term view. Pretty topsy-turvy week so far, and last week was a shortened week. Again, guys, it's just the way it is with new Donald Trump administration, Federal Reserve, oil markets, everything ties in together. We just got to make sure we're on the right path and we have the patience to see it through. So if you guys have any questions, feel free to email me, garcapital@gmail.com, and we'll see you in the chat room. And we have a couple of days left in our trading day. I don't expect us to close any trades until then. With that being said, have a great night, everybody, and thanks for joining me again.